Hello, 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 guys. Markets are getting hammered. Just in the last hour or so, there's some news that's breaking out of the Israel-Iran conflict, and oil prices are up. Markets are reacting. I'm going to break all of it down for you. A lot of this is breaking like right now. What's happening with the Israel-Iran conflict? I'm also going to talk about what's happening with the job market right now. I think things are cracking beneath the surface. Talked about this a lot recently, as far as the job market not looking so hot. Okay, and not only layoffs, but what's going on when you dig into the numbers a little bit, and why I think we're having insiders selling at unprecedented levels in the stock market. And then we're going to break down the crypto side of things. So let's dig into what's happening in Iran, though, right now, guys. This just came out yesterday that Trump says he vetoed the Israeli plan to kill Iran's supreme leader. He came out on video stating this, actually. And Netanyahu said that, well, we're not ruling it out. Okay, so we might go in and take out the leader. When asked about it, he said, no, it's not going to escalate. It'll end the escalation if we do this. And said Israel is going to do what we need to do. So things are certainly escalating. I'll tell you what, when you looked at the markets over the last 24 hours up until about the last hour, it had largely baked in that this was going to de-escalate. There were some rumors that there were going to be some peace talks. You saw the price of oil go down and markets rallied. Well, we're seeing quite the opposite right now, and I'm going to tell you exactly what's broken in the last week. There's some other claims that were made in the last 24 hours. Netanyahu said that Iran tried to assassinate Trump twice. He said that there were 2 assassination attempts through proxies. Very interesting stuff. Through their intel, yes, they want to kill him. He's their enemy number 1. So he says, right? We don't know. There are some reports right now that Iran has been pushing the U.S. to get a ceasefire. They want the U.S. to put pressure on Israel, and they're also going to Qatar, Saudi Arabia, and Oman to go to the U.S. and try to put pressure on them. Well, here's what happened just in the last hour, guys. We had Donald Trump coming out and saying that they should have signed the deal I told them to sign. Simply stated, they cannot have a nuclear weapon, and everyone should immediately evacuate. This is an account that has been pretty accurate. Apparently, there are people evacuating right now. And apparently, Trump just said that his entire National Security Council needs to be present and prepared in the Situation Room upon his arrival this evening. So things are absolutely escalating, and you can see this with the price of oil, guys. Crude oil is on the rise. We saw this, this big drop really this morning when there were the rumors that peace talks were going to happen, down to $68. They're on the rise again. And if you look at the stock futures, CNBC just updated this about an hour ago. They said there was little movement. Well, now we are seeing stock futures fall as the conflict continues to get worse. And of course, this, is all tied to the markets, guys. Like as oil prices go up, it's very much tied to inflation expectations. When CPI goes up, it's bad for the markets. And it's not just that. This is the bigger deal that I think people need to be aware of. Just this last year, Iran joined BRICS Plus. Okay, so they are in a coalition now with Brazil, Russia, India, China, and South Africa. The most noteworthy ones there, China and Russia. So this could, if this escalates and the U.S. has to get involved and they have to choose sides, historically, you'd have to assume they're going to choose Israel in this situation. I know a lot of people don't want the U.S. to get involved here, but this could become a much bigger thing. So I believe that's why we're seeing the markets react the way they are. Of course, the big winner in this, guys, commodities, gold, safe havens. Gold is back on the rise again. You see, it's an inverse. When you have the traditional markets going down, you see oil prices going up. Well, gold futures are on the rise. It shouldn't be a surprise. Other commodities, too, are doing quite well. I've talked about recently, the other day, I talked about how copper is a really good bet. I think commodities are going to have a major run in the coming years. With copper, electric vehicles, high demand for copper. You look at, a country like China, where only a third of their population owns vehicles today, and their middle class is growing. And then you have emerging countries that have to build out electrical infrastructure. Copper is going to be needed for all that. In fact, you're going to have copper shortages. And one of the things I brought up was that aluminum is an interesting dark horse play if we see copper shortages. And Alcoa is not a bad play there, in my opinion. The other thing we're seeing, I brought this up about a month ago, is uranium stocks. Nuclear is not going anywhere. In fact, I think we are going to see a major comeback when it comes to nuclear. Well, let me close my window here. Sorry, guys. All right. Guys, uranium. Nuclear is having a major comeback. In fact, so there's currently, some notes here, 440 operating plants globally, with 58 under construction and another 150 to 200 in the planning and approval process. And in particular, when you look at China, they have 53 nuclear reactors powering cities across the country. They have 20 more underway right now that they're building. India has 22 operational plants. It's building 11 more. So we have countries all over the world that are building more nuclear. And Trump also hinted at potentially a major comeback for nuclear in the U.S. Now, the stock I'm looking at here is NextGen. Apparently, they have a lot of supply that's going to be coming online, speaking of uranium, in 2028 to 2029. They control 300 million pounds of future reserves. And sitting at, what's that, $6.99, the stock could be worth $15 to $18. That's not a bad play if you're looking to get, not financial advice, but if you're looking to get exposure to uranium. Fun fact here, close to 40% of global enriched uranium comes from Russia. Huh. That's crazy. But anyway, we need to keep a close eye on the Iran-Israel situation. I think we're going to have some short-term pain in the markets again after we had seen quite a rally based on the news that had leaked that things were going to be worked out and there are going to be some peace negotiations. Seems like things are very likely to escalate this evening and right now as we speak. So not great, guys. Not a good situation. All right. By the way, guys, coming up on 2,000 subs on my YouTube channel. Make sure to subscribe if you haven't already, and like and share if you're on X. I'm actually got added some more places to stream to, so I'm on here every day, but headed like Facebook and Rumble, so we'll see what happens on those platforms. All right, let's talk about the job market, guys. This is a big deal. Things are looking pretty dire. In particular, this report came out about how young graduates are facing an employment crisis. Though the national unemployment rate is holding near 4%, the job market has turned especially grim for young people, according to the Wall Street Journal. New college graduates from 2024 are facing a 6.6% unemployment rate, among the highest in a decade. Ages 22 to 27 was 5.8% in early 2025. And this is the widest gap between young and overall jobless rates in 35 years, according to the New York Fed. The reasoning, they're saying that entry-level hiring is down 17%. And even roles that are labeled entry-level require years of experience in many cases. High school grads are sitting at 15% unemployment. They're saying here that, it's not because of layoffs, but that there's just not enough hiring and not enough job openings. Guys, this has been building up for some time. If you look back, this was last August, this came out, that, in Biden's last year in office, they revised like 17 out of 21 job reports downward. And in particular, in the range we're talking about, from April of 23 to March of 24, there's 818,000 fewer jobs created than what they had originally said had been created. So the job market has been shitty for a while. They just kind of lied about it. So this shouldn't be a surprise. Now, it's getting worse. And one of the things in particular I want to point out, they're saying the cracks are spreading in the U.S. Labor market. This is just within the last 2 days. Unemployment is low by historical standards. Jobs being added, and the participation rate remains elevated. But when you dig into the numbers a little bit more, the cracks are spreading. Underlying data is telling a different story that's not made into the headlines yet. So what are they talking about? Well, in particular, the one I want to talk about is part-time work. Guys, we are seeing that there is a huge drop-off in full-time employment, and people are picking up part-time work. In the last, from fall of 23 to fall of 24, we had 1 million less full-time jobs. People were picking up part-time employment. And we saw this, obviously, this is the COVID, layoffs that recovered, but we're seeing now a downward trajectory here. The last time we saw this was in the 2008 global recession. So in particular, what we're seeing is the gig economy is where a lot of these people are picking up work. They're getting laid off. They can't find full-time employment. Not a good thing, obviously. We're seeing the same thing here as a percentage of the total labor force. But the gig economy, of course, is your Uber and Lyft drivers, your Uber Eats, Amazon Flex. So these jobs that back in 2008 weren't even a thing. The problem, of course, is that the gig economy can only grow for so long. And it has been a good stopgap, but the gig is up, if you will, or it will be soon at least. So I highly recommend following this woman. She does a really good job of highlighting. Yesterday I talked about, or I think it was 2 days ago, I talked about how student loan payments are coming due. That's gonna be a much bigger deal than people realize. There's a lot of people that are 90 plus days delinquent. They're gonna start having their wages garnished. They're on Social Security. They're gonna see garnishment there if they're not paying back their student loans. So that's gonna certainly hurt when it comes to consumer spending. But 170 plus companies, cut jobs in June, and this is not routine. You're talking about JP Morgan, Walmart, Microsoft, Coca-Cola, eBay. This is not just like tech companies like we saw over the last few years. It's hitting all types of industry: tech, finance, retail, logistics. It's not good. And this is something else that we've seen, over the last 2 quarters, is that when companies are having their earnings reports, they're removing future forward-looking guidance altogether. And the question, I think this does a good job of highlighting it, is it the tariffs or is it AI? Well, I think it's a combination of both. So on the tariff front, CPI numbers or inflation numbers have come in really good, actually. And I think a lot of people are very surprised by that. In Trump's last presidency, they put tariffs on China. University of Michigan did a study a couple of years after the fact and found that it only added about 0.7% to prices. Now, it's important to keep in mind that those were only tariffs on China, and they also circumvented a lot of those tariffs by going through countries like Vietnam and Mexico. This time around, we have blanket tariffs all over the freaking place. So it's making it a lot more difficult for them to circumvent. The thing that I think people need to realize, though, is that, yes, some companies are raising prices, but a lot of companies can't because consumer spending is not strong enough, and they are just taking on the cost of the tariffs, and it's going into their margins. And that's a big problem because they need to cut costs somewhere. And where's that going to happen? Well, it's going to happen in the employment and headcount. And we're starting to see the layoffs mount up. And I reported on this like a month ago. There's reports that were coming out that a lot of these companies were creating lists of employees that they were going to lay off if things did not get better. And I think, we're seeing the tariff situation is going to lead to layoffs. I think these companies would love to pass it on to the consumer, but in many cases they can't. So the large companies, at least, that can have the margin to eat the tariffs, they're doing so, but that's going to have a downstream impact. Now, for small to medium-sized businesses, that they're kind of screwed. Like they have to pass it on. And I think we're going to see in real time that consumer spending, consumer sentiment is going to continue to drop off a cliff, and that's not good for the overall economy. Now, that's one end of it. I think tariffs are going to lead to layoffs. Now, on the other side, I talked about the gig economy. We're seeing AI already start to replace jobs. And I know this is something we've been talking about for some time, but I think it cannot be understated or cannot be overstated. When you think about the gig economy, your Uber drivers, your Lyft drivers, we are very close to having robo taxis. In fact, if you live in California, you've likely ridden in a Waymo. Tesla, within the last 2 weeks, is starting to test their robo taxis in Austin, Texas. We are getting really, really close to this happening. This is a multi-trillion-dollar market that is going to be taken over by robo taxis, and that is going to absolutely decimate the gig economy, guys. Like we're going to see massive drop-offs in the Uber jobs, the Lyft jobs that have propped up the market and the job market as people have gotten laid off from their full-time work. They're going to have less and less options on the part-time side. So when you combine both the tariffs and the fact that the job market has been weak for a long time, regardless of what the news is telling you, the reports and the numbers say different. So this is nothing new, but the tariffs are only making things worse. And I think that this is going to be ultimately what drives Jerome Powell to lower rates. Right now the highest likelihood is that we'll see 2 rate cuts this year. If things continue to escalate, these global tensions continue to escalate with the wars that are taking place. If the job market really starts to soften, I think we could see more. That's not a good thing though. But then you have to look at the fact that I brought this up before. Institutional professional investors, guys, are selling. Retail is buying. So while the stock market has stayed pretty resilient, you have to start questioning, why are the insiders selling and why are the professional investors selling? And is retail being led to the slaughterhouse? And I think there's a high likelihood that's happening. If you look further into the insider trading, that's a lot of red, guys. There's a lot of the insider trading refers to when companies, executives, board of directors, and or major shareholders buy or sell company stock based on non-public company information. Guys, this is a lot of selling. And this should be, I don't want to be an alarmist, but this should be something that we take very seriously. They see something, okay, that retail is not seeing. And I think that it is partly that they see that the job market's weakening. I think they see that these tariffs are going to start having a major impact. The geopolitical tensions that are taking place around the world, there's a lot of uncertainty right now. A lot of uncertainty. All right. Let's move on, guys. Let's move on. Let's look at Bitcoin. Let's talk about some crypto. We've got Bitcoin sitting at 107,000, just under it. It got almost up to 109,000 today. I think we are starting to see some decoupling, from the traditional markets in the sense that people are starting to look at it as a safe haven, if you will. But, we're not quite there. When you saw oil prices rise, we saw gold go up, we saw Bitcoin drop. So, while it is holding up better than it has in the past, it's still not fully decoupled. But guys, considering all the stuff going on in the world, and we're sitting at almost 107,000, Bitcoin is looking pretty damn good. The crypto market as a whole, though, the day was looking great until the last hour with this news out of Iran with Trump's tweet. Things are certainly down. We are seeing a lot of red in the market right now. Should not be a shock to anyone, because these are all the most risk on you could possibly be in any market. Obviously, your medium and small caps are going to get hit particularly hard when you have uncertainty in markets. They're going to get hit first, and then you see the stock markets come. But always important to zoom out. I'm going to play this clip for you all. Warren Buffett, this is 11 years ago when Bitcoin was $600. $600.
it does not meet the test of a currency. I wouldn't be surprised if it's not around in 10 or 20 years.
Why does it not meet the definition of a currency?
Well, because people say, well, I'll sell you goods in Bitcoins, but they change the price of those every time the price of the dollar changes in relation to Bitcoin. They're pricing off the dollar. They could say, well, I'll sell it to you in barrels of oil, but if they every time the price of oil changes, they change the number of barrels you have to have. That's not your oil is not the currency.
Well, Warren Buffett, very smart guy. This was a pretty bad take on his part, as Bitcoin is now up 17,400% since then. This is $600. Again, we're sitting at $106,000 today. Rare bad take. Like, Warren Buffett is a legend. But my point is, always important to zoom out when in doubt. Don't pay attention to the short-term price action. Pay attention to the fear and greed index. Okay, so let me pull that up. The fear and greed index. Very important. Very important. Because, look, there's a lot of volatility in crypto. Well, that one's not working. We'll look at this one. We'll look at this one. Here we go. Fear and greed index, and particularly in this market cycle, guys, we have seen that both times we've gotten up around the 90 mark. Within 3 weeks, the market topped out. We saw this once in spring of 2024. Market topped out roughly 2 weeks later. We saw this again right around Thanksgiving. And the market topped out 3 weeks later, around the first, second week of December. So this is something to absolutely be keeping an eye on. And, you know, I've said this before, but one thing about this market cycle that's been particularly different than the last market cycle is that it's been very much institutionally led. What we have not seen any major rallies or sustained rallies once we hit that greed. Bitcoin, generally in the past, you'd see Bitcoin climb and then money roll into alts. We have not seen that. I think that's because there's a lack of retail. It's a lot of institutional investors. There are obviously a couple catalysts, though, and I'll talk more about that in a minute, that I think could help with alts. But I think for now, that fear and greed index, we need to keep a close eye on that and make sure to be diligent about taking profits. Now, I'm going to share this with you, and curious what you guys think. Not great, in my opinion. Not great.
Crypto, your dad's financial disclosure form came out, and I saw he had, I think it was $57.7 million in income from the crypto company World Financial Liberty that you guys are associated with.
World Liberty Financial.
World Liberty Financial. So he does benefit financially from your enterprise.
Well,
you and Eric,
he has
right?
ownership, but he doesn't touch it, right? That's all walled off. Eric and I are the signatories on that. We manage the trust. We don't talk to him about it. He doesn't, get involved in that. But he did say and ran on a campaign that he was going to be an active proponent for crypto.
Okay. Yeah. You can be an active proponent for crypto, but in his disclosure, he made $57.7 million on crypto last year. But hey, he doesn't touch it. He doesn't get involved with it. Guys, I think longer term, some of the regulatory stuff that's taking place for crypto is a good thing. It creates some major tailwinds, but in the short term, not a great look, frankly, for Trump to be making $57.7 million. The media is going to have a field day with that. I can't say they're so wrong for doing so. I don't think it's a great look. But in other news, one of the catalysts I want to talk about is the Solana ETF. And Cantor Fitzgerald came out and said that the Solana treasury strategy is better than Ethereum, and firms that are buying Solana should be trading at a premium. Very interesting stuff. And said that using Solana over Ethereum as a treasury asset makes a lot of sense. Well, check this out. The Solana ETF likelihood for an approval by July 31st went ballistic just over the last week. We are now at over about 70%. Was it 71%? Just moved down to 69%. Nice. So, guys, I think this could be a massive catalyst for altcoins. I also would not be surprised if you see people start to front run and buy Solana. Obviously, Solana is down right now with the news over the last hour or so from the Iran situation. But I would not be surprised to see a nice move in Solana as people are preparing for these ETFs to launch and the money that's going to come into that ecosystem. And I do believe, oh, look at that, back up to 71%. And I do believe that we would see a lot of new capital enter the space. You've got a lot of degens holding on to Solana. They would be able to take profits and you'd be able to see that money flow into altcoins. I think that is a massive potential catalyst. And it looks very likely that we will be getting it within the next month and a half. So by the end of July. So that's huge news. Now, while they did dog on Ethereum, Cantor Fitzgerald did, people are still buying, guys. People are scooping it up. 818,000 ETH on June 15th alone. So there's a lot of buying, a lot of accumulation on Ethereum right now. So look, all the larger alts are starting to see accumulation. So that is why I do think we could see a nice move in, medium and small caps. But I think it's going to be really important to keep your pulse on what's going on in the macro environment, because as we've just seen in the last week, all it takes is for one event to really ruin things. And I do think, guys, like with the job market weakening, with everything going on around the world, and you look at the smart money in the stock market, like they're selling, insiders are selling, institutional selling, with retail kind of holding things up. Yeah, we could still see a nice rally, but I still think it's a matter of time before we see a bigger washout and a bigger reset that will force Jerome Powell to lower rates. And I think, again, I've said this before, but if the Fed is faced with the decision between the job market and fighting inflation, I think they're going to take the job market every single time. At least historically, that's what we've seen. So I would expect them to act swiftly if we see any type of massive move in the job markets. So we should, in theory, see a V-shaped recovery. But I would not take that off the table at all for us to see some sort of a massive correction pretty soon here. Things are there's too many things going on right now that are negative. In other crypto news, we have Michael Saylor, who's working with Pakistan for their crypto ambition. So Saylor reportedly met with the top Pakistani officials over the weekend to explore how crypto could help reshape the country's financial future. And it was described as a landmark discussion. And they're looking at focusing on how Bitcoin could be used in sovereign reserves and monetary policy. Meanwhile, Pakistan is accelerating efforts to become a digital asset leader in the global south. Look, we're seeing a lot of countries moving this way. And I know it's not in the mainstream media, y'all, but Bitcoin is the reason why the price is going up. And it's not retail. It is countries around the world. It is companies, institutional interest in particular. There's also some rumors that they're getting really serious. The U.S. is about purchasing more Bitcoin. Right now, they're holding a little over 200,000 Bitcoin. Keep in mind, again, there's 21 million that will ever exist. The ultimate goal for them is to hold 1 million. They have to do it in a way that's net neutral on the budget. So they are looking at ways and strategizing on ways they can accumulate Bitcoin without it adding to the deficit. In other news, the stablecoin bill, guys, that's a big deal. It's the other catalyst that I always talk about aside from the Solana ETF and Solana Spot ETF. JP Morgan has filed for a trademark for a stablecoin. In particular, if you look at the document that was filed here, again, from JP Morgan, let's talk about this shift, by the way. Jamie Dimon has just shit on Bitcoin for years. And now all of a sudden they're launching a stablecoin to put the dollar on chain. But it says here that they are looking goods and services for trading, exchanging, transferring, and payment services for digital assets, including virtual and digital currency, digital tokens and payment tokens, decentralized application tokens, as well as blockchain-enabled currency. So maybe other digital assets as well. We'll have to wait and see. But the banks have to get on board here. They're bleeding capital. You have people that are going to money markets. You have people that are investing in crypto. They are losing deposits at alarming rates. Bank of America came out and talking about the technological disruption. See here, they have the telescope, they have a microprocessor, cell phones, DVDs. Guess what else is here? Bitcoin and AI. And there's a lot of ways that crypto in general and AI are intersecting. Quantum computing coming next. There's a lot of plays to take advantage of there. I'm going to talk more about that in a minute. In other news, before we get into the deep end sector, guys, we have Pump.Fun. Their account has been suspended by X. There's a lot of speculation as to what could be happening, but apparently it's not just them. X is cracking down on all accounts promoting cryptocurrency tickers and platforms. And this is part of a broader stance to stop financial abuse on the platform by large influencers. And there certainly has been a lot of that. I mean, there's no doubt about it. But you're seeing a lot of these accounts are getting suspended here. They're saying that there's going to be a lot more getting the ban hammer of justice soon. And you know what? A lot of the accounts were shilling stuff. A lot of the accounts in the meme coin space were using people as X liquidity, and they were, frankly, had their private Telegram groups, were pumping tokens and took a lot of money from people. So, Pump.Fun, in my opinion, was really bad for the space. I think the only silver lining you could really bring up is that it's brought new people into crypto and they learned how to use Solana, but most of them got absolutely wrecked. Whether it was the vape cabal out of California, those guys suck, or the Argentinian president or our own president. Let's be real, guys. Like, not great. Not great. All right, what we got here? Will any of them come back? What's up, Bob? Will any of them come back to crypto? I think so. I think eventually they will. Yeah, I think eventually they will. It has to become more mainstream, and I think that people that got burned, they're going to become later adopters when they come back. I think it could be something where it's like, a deep end project they start participating in without even knowing that it's crypto. But ultimately, I think people are going to have to look at crypto investments. As we continue to see adoption, I think it's being incredibly important. So, yeah. So I think that we will see some come back, but I think it'll take some time. There's been a lot of people that have been burned, man. I mean, between Pump.Fun and this market cycle and the last market cycle, you saw the NFT craze, and then FTX and Celsius. I mean, a lot of people have lost a lot of money in this space. But what's remarkable to me is that we're still here. Bitcoin's still sitting at 106,000. We haven't quite seen the interest in in the altcoins that we've seen in the past, but I think that's more an element of the overall economy and retail not having money to invest than anything. And we're still very early when you look at the overall adoption rate for crypto. Let's see here. All right, let's talk about Deepin. The drama of Demo. So last week, Demo came out and said that they are going to be charging a subscription for connection. I can tell you that they are taking the feedback, which has been absolutely negative, and I think it's warranted, on their subscription plans. I've actually, I will say, I have been talking to their founder, Rob, and Alex, both of them, giving them my thoughts and what I think they should do. I'll tell you what I said they should do. I told them that they should have an auto opt-in feature to share your data, because that's I'll pull it up right now, the Dune Analytics for them, because I think this plan could save them. And I'm not saying if they go forward with their plan, I'm not saying that the project's finished, but I think for your standard Deepin-minded investor, I think it is. I think they would have to do a hard reset and replace a lot of their vehicles with non-crypto people. So, what's up, William? What happened, man? You looking at the markets? Oh gosh, I haven't looked since I got on here. Yeah, not good. Not good. But here's the problem, guys, is that like they need to get cars connected to the apps, and they're not seeing it. So obviously everyone automatically has to connect to the Demo app. Right now they're only getting 30% of the vehicles are connecting to an additional app. And I'm sure that many of them are connected to multiple apps. So really probably like 10% of the contributors are actually connecting to multiple apps. That's not good. So what I suggested to them is that they give people an option to automatically opt into sharing their data and sharing data with all the different apps that can monetize that data. Now, why does that matter? For every app that a vehicle connects to, above and beyond the Demo app, that generates $1.25 per vehicle per app monthly. So you look at 182,000 vehicles. If each one of them connected to 3 apps, that would generate $682,000 a month for the protocol. So, my stance was, okay, give them an opt-in feature, auto opt-in option. And also when they're onboarding new vehicles, it should automatically opt them in. They should have the decision to opt out. But if they opt out, then they have to pay a subscription fee. Okay. And this would drive the behavior they need to have people leverage their data in different ways. I think most people were under the understanding that they were sharing their data anyway. So they would basically do what most people thought the protocol was doing. And then as of right now, they have for revenue coming in 80% of the $1.25 going to token burns. And my suggestion was to alter that, lower the burn, take that differential and put that towards the subscription fees so that it's covered. And that's sustained, that's self-sustained. If you're sharing your data and it's generating enough revenue, that could pay for the connection fee. It's a great idea. It makes you wonder why it wasn't implemented already. As you said, people are under the impression they're sharing their data. Yeah, I think it's just a communication problem, man. Like, I think the team is really, really smart and they're really good at executing in a lot of ways. But I think when it comes to communication about, getting the vehicles connected to the different apps, I think it was a big miss. And I think that's what it comes down to. So to me, this would help them save face with the community. It would help them keep the vehicles connected. It would drive people to connect to the applications. I think it'd be healthy for the overall ecosystem. And then you got to think, as they add more applications, it would generate more revenue. This all seems like a huge ball drop, and with the mass disconnection just over the horizon, I think it is a big moment. Like they've got to make a decision. They got to do the right thing here if they're going to pivot. So I agree, man. So I've been in direct conversation with the founders. That was my suggestion. I think they're taking all suggestions into consideration. The fact that Demo came out and said this. There'll be an update on lower cost subscriptions and other important news next week. Actually, this guy's below is someone that's he's in my fleet. But yeah, man. So we'll see what happens. I hope that they take my thoughts in consideration, but we'll see. We'll see. I think it would be it could really turn the tide for them and bring the community back to them. The other thing is that there's a lot of reports with Hivemapper right now that you have the Bs earning less than the HDCs. And it sounds like it's in Ariel's radar. They're looking at it. I just got my B. For all you people that are think I have like a inside track to get my equipment sooner. It's not the case. But I'm going to do a side by side. I'm going to do run the B on the same drive as I run the HTC. I'm going to see if it actually is true for me. But I'm seeing a lot of these reports that the original model is earning more than the B, and it shouldn't be. For one, the B is getting real-time data. It also requires you to pay for a subscription, a LTE, connection, and it's the newer hardware. So it should be out earning the HTC, in my opinion. So we'll see what comes of that. In other news, Streamer TV. It's a peer-to-peer network. Actually, it's going to be my project highlight of the day. Streamer has been around for quite a while. In fact, they had I think it was like 7 years before they had their mainnet launch. They have like a real product that's, it's fully baked, man. Like it could be like Web 2 customers would use this, and I think it'd be pretty seamless for them. They are launching, so the Streamer network itself, they're launching on the Streamer network, the Streamer TV. So let me just explain how this works. Again, it's a peer-to-peer network. So Demo was built on this. Essentially, instead of you sending your data, like for Demo, for example, instead of them with each car sending their data to like an Amazon Web Services, a centralized entity that has, a data center, instead, one vehicle sends it to 4 more vehicles, those vehicles send it to 4 more vehicles, and you kind of have this like spider web effect through peers in the network without having to ever go through a centralized entity. So there's a lot of reasons why that's a good thing. I mean, for one, you look at these AWS data breaches, you look at the downtime. We've seen a lot of that recently. Very, very costly. Having a decentralized way of doing this, really, you don't have to worry about those issues. So I think the peer-to-peer aspect is really great. And having this Streamer TV, which is going to be launching in less than 24 hours, built on top of the peer-to-peer network, pretty cool stuff. And I am going to be broadcasting to their platform as well. Now, when you look at the price of the token right now, obviously everything just took a dive over the last hour or so. But, dude, only a $14.59 million market cap, and they're about to have a real product that's being utilized. I mean, their Streamer was utilized. By the way, ticker is data on this. But now a Streamer TV launching, I think there's a massive opportunity here for them. So very exciting stuff. I'm hoping to get my own segment on there, but they've got to add compatibility with StreamYard, because that's what I stream from. Streamer, yeah, they use Streamer. Yeah, it's built on top of Streamer. So I don't know. I think it's a cool project. So, by the way, guys, I am, based on some community members, and Bob, one of them, I am going to break down my list of, I'm going to go backwards. I'm going to do like 2 projects a day, my top 20 DeepIn projects. But I have 20 that I really like, so I might as well do the top 20. And I'm going to break down a couple every day, and why I like the project, where the project stands, recent developments, etc. I'm also going to break down some red flags. I don't like to call out projects by name that I'm not a fan of. I just don't think that there's a lot to gain there, because maybe my take's wrong, and you just end up ruffling the feathers of that community. But I think that you can call out red flags and let people connect the dots. Things to look out for. So I'm certainly going to do that. By the way, guys, make sure to like, subscribe, share. There is a recording of this so people can watch it after the fact. And join me. William will be on there too. We have our Tuesday space tomorrow. We're going to talk about that recent report from the World Economic Forum that DeepIn's going to hit a $3.5 trillion market cap by 2028. We're sitting at like 30 billion right now. So that would be quite a climb. And we're going to talk about how viable that projection is, and which DeepIn projects and which sectors of the DeepIn would be the true winners there. We're also going to talk a little bit about the subscription model, and where Demo, where they could improve and fix things, and what other projects we could see maybe going down that route and whether or not that's a good or bad thing. So we got a lot to talk about tomorrow. So if you guys have a chance, it's at noon Eastern time, 11 Central time. We'll be going live. Williams there. We've got a couple other guys that go on there every week. And we'll have a nice discussion. So make sure to join that. And what I got for you tonight, guys. Hopefully this escalation with Iran doesn't get too bad. Sounds like, based on what Williams said here, that Iran is pretty much cooked. That doesn't sound great. So obviously the markets are going to react. Man, scary stuff, guys. Scary stuff. All right. Appreciate you all. Peace.